good to have you.
It's great to be here.
At the conference again. I think we talked here last October, because they've sort of bunched them closer together to get back on schedule. But let's talk about these markets right now as you look out. In particular, growth is getting just hammered day after day. How does that make you feel, particularly about your private equity portfolio, where obviously you've been investing in growth for some time?
Yeah, look, there's clearly a correction going on. Personally, I think corrections are healthy, because over the past decade, and it really accelerated over the past few years, liquidity and momentum drove valuations, particularly in certain sectors and certain types of companies. And I think there's going to be a focus back to fundamentals, which is, great companies, but profitable growth. There's got to be a way to get to profitability and cash flow, something that Carlyle has been focused on all the time. And so for the most part, we're seeing our portfolios holding up very well. Our first quarter, we're seeing real resilience in our portfolio. And our platform continues to pivot and look for opportunities. So I view this as a healthy correction. Clearly, it's going to take time to play out. But these types of corrections create opportunities as well.
They do. And no real concerns. I mean, listen, it's not as though we haven't seen headwinds, but this is a somewhat unique moment here with the Fed. I mean, the balance sheet at $9 trillion coming down, ready to raise rates dramatically for what may be an extended period of time. Inflation at all-time highs, supply chain problems, war in Ukraine, China lockdown. I don't know. There's a lot of cross currents right now.
There's a lot going on. Yeah, we have to be mindful of all those issues. Clearly, we're being very thoughtful, mindful as we're navigating through this environment. But let me just give you a snapshot of at least what we're seeing through our portfolio companies. It might be helpful. As of the first quarter, our companies, by and large, growth was still pretty strong and margins were still expanding. So there is more resilience in this economy than perhaps people give credit for. Now, clearly, all these issues are going on, and clearly we're going to have to keep working with our companies through. But these types of conditions are also creating opportunity because of the trends that are being set up for the future. Things like energy transition, the heightened state of volatility, clearly the decoupling and the regionalization that's going on in the world. So I take a step back and with my leadership team continually think about how do we position Carlyle, where are we going to try to find opportunities that play into those types of trends.
I want to talk to you a bit about that repositioning you mentioned in terms of credit, but to stay on PE for a moment, I mean, does an environment like this prevent exits that otherwise might have happened? Do funds just basically stay there for longer? Is that something your investor base has got to get accustomed to?
Yeah, I think M&A activity, when these types of disruptions and corrections start happening, both buyers and sellers, they take a pause. I think you saw that in the first quarter, 6 to 8 week period of time when both buyers and sellers took a pause to recalibrate valuations. But I think as confidence comes back, you start to see that activity emerge. But I think the key thing is, while exits could be delayed, you got to keep working your portfolio companies. If they can keep growing, keep driving earnings, profitability, the value is there. It's just a matter of when you can capture that value.
Right. And so far, again, you're not seeing any diminution in demand, for example, from the customer bases of these companies.
Correct. So far, I say so far, through our first quarter, we are seeing resilience throughout our portfolios.